Happy Monday morning and welcome to Wake Up Real Estate. It's Monday, which means we're going to talk a little motivation and mortgage, maybe some marketing as well. Probably going to keep it short and sweet because all of us are very busy and have lots of good things to tend to. Great arising to you, Winifred. Good morning, Mike. Happy Monday, Chris. The Wake Up Real Estate Show is brought to you by Just Listed, Just Sold, powered by Thanks.io and the virtual mortgage providers team at NEXA Mortgage. And Jordan is our, I don't know, do we have an official, we always kick around different titles, production manager, I don't know. He's the guideline guru. He's the financing fixer. I mean, any other alliterations I can come up with. And we're going to talk about a recent change to mortgage guidelines or regulations that might create opportunities to more creatively and proactively sell more homes, close more deals, etc. Before we do that, though, let's start Monday off with a little motivation. Some succeed because they are destined to, but most succeed because they are determined to. Some succeed because they are destined to, but most succeed because they are determined to. Yeah, I mean, determination, persistence, consistent, right actions, moving in the right direction. That's how you win over time. That's how you win over time. Jordan, let's talk seller gifts of equity. Seller gifts of equity. What does that mean?
Well,
how can we as real estate agents use that to our advantage? What how's all that
well,
work?
I typically like how I like to explain, what gifts are in general, on a home loan. Gifts are typically is from family or very, very close friend, long-term friend, if you're considering FHA, that would give them funds essentially to buy a house, right? Or closing costs, either or, down payment or closing costs.
To help them buy.
Yeah, to help them buy. Gifts of equity is the same, but it's coming from the seller. And traditionally, that is if you're buying from mom, dad, brother, whoever, usually it's a familial relationship doing a gift of equity, but conventional just changed their rules. If you do not have any, you don't have to have any relationship with the seller now. And you can do a gift of equity for the down payment and closing costs. This is super beneficial for people that have recently lowered their price, right? Instead of offering, I'll give you an example. I have a client that just dropped it because he really wants to sell really bad. And he's moving to Texas because of a job offer. He dropped his price $70,000. Well, he could have also offered $70,000 in gift of equity. That would have covered everything on a $500,000 house, closing costs, and probably a good chunk of money down, 10% down probably.
Yeah.
So it's just a way for a seller to give funds to the buyer to purchase their home.
So some additional maybe points of emphasis or clarifications. Well, number one, we've done several deals over the last couple months where we had the familial gift of equity. Yes. Have we not? Okay. Mm-hmm. So that's been available for quite some time. This is different. The immediate thing that popped into my mind when you said that big price drop, and this ties into Chris Harris, the property, Chris says any appraisal issues. So the property will still need to appraise. Yes. Jordan, you're froze, I think. Maybe I'm froze. As far as I know, while we're waiting for Jordan to unfreeze, just like any other situation or scenario, the property will have to appraise, right? So for me, the opportunities are finding properties that have had price reductions or been sitting on the market, and that by quick check, right, which you can use Remind, you can use RPR, you can even use Zillow. I don't think it's the best, whatever. But by quick check, seems like the value is there from an appraisal perspective, those may be the opportunity. Jordan, I think you're back.
I think I'm back. Sorry, I'm in Arizona at our summit, LOS summit. So I'm at a hotel, and I didn't know if I needed to upgrade the Wi-Fi or what I need to do. I obviously need to upgrade it. So yeah. Anyway,
so the question was, appraisal issues, and what I was saying is the opportunity. So if you're the listing agent and you've got a stale listing, right, exploring this with your seller in lieu of a price reduction, or maybe combined with, but the opportunity on the buy side, as I see it, is identifying properties, even new builds, new construction, where the value, from what you can tell, is there, or even greater than what the current list price is. And as crazy as that sounds, I guarantee all of you can go into your MLS right now and find properties that are listed at a price that if you go and look at the AVM of the property on any different RPR or Remine or even Zillow, the AVM is greater than the list price. There could be any number of reasons why. They started way too aggressively high. It got stale, and now they're backsliding, whatever it may be. But I guarantee all of you can find those. And that could be a great opportunity for you to say where you can come in over list price. We're bringing you an offer over list price, Mr. or Mr. Listing Agent. Or what we're asking for is for your seller to gift some equity to my buyer so that we can make this deal happen. And in fact, I think maybe later in the week, I'll even dig into my MLS and show how you can find those opportunities.
I have I sent a text to an agent I work with in my area. One of her agents posted where something fell out. The buyer fell out, but the appraisal was done, right? The appraisal was done. It appraised higher. It appraised for $155. They were selling it for $149.5. So $10,000. If you can tell my price point in my area off that, but
people are like, what is that for? Is that
Woodstock, Kansas, right?
Shack?
Yeah. No, it's actually for a pretty decent house size. But I sent her a text message. I was like, hey, instead of you're letting them know what the house appraised for, right? Why don't you add on there a gift to equity if they're going to keep price the same? It's like, hey, at 150 we'll do a gift to equity of $10,000, and then boom, this is a zero down home altogether. And when I say zero down, it's typically the traditional zero down is pretty rough. There's no such thing as a free lunch, okay, in the terms of zero down. When you're talking about down payment assistance, the rates are higher, closing costs are higher. They're much higher than it is in the normal market, just because of how the economic situation is and how rates are going to fall real soon. So banks are hedging as much as they can and forcing buy downs. With that being said, this completely alleviates that. It's just like a traditional mortgage. There is no difference between you getting a gift to equity and then you putting your own money down. There's no pricing adjustments. There's no extra added to the rate. So you could get someone a gift to equity on conventional loans. Let's specify that's, if no familiar relationship, it's only conventional that's allowed on. But you can give them a gift to equity that maybe they didn't have, or maybe the seller concessions weren't enough. 3% seller concessions weren't enough. So
that's what I was going to double tap on. So you can still get the 3% seller concession and get a seller gift of equity. It's not either or. You can have both. You can get both. And so that's
with that being said, your gift to equity, it's a little redundant in terms of getting both, because your gift to equity could just be can cover everything, where seller concessions can only cover closing costs and discount points and prepaids, right? Where gift to equity can cover both down payment and.
So let's just run a scenario. You've got it's a $300,000 listing, and they're doing a 3% down conventional, and the closing costs and fees, et cetera, is going to be 5-6%, let's say. Okay. Right? I mean, is that fair? Are those fair assumptions?
Yeah.
Right.
Yeah.
So then you can go and get a gift of equity of 8%. If you can negotiate
you can do a gift of equity for 8%. You'd have equity starting the home, and it would pay all your closing costs. right? So it would cover everything. Yeah, exactly. You can get a gift of equity for more, 8%. It would cover. You wouldn't ever need to ask for concessions, because if they're going to give you a gift of equity, might as well give you for all of it.
Later this week, I'm going to go into my MLS and I'm going to find properties that would fit. Not that the seller is going to accept them, but what I'm describing is properties where, I know all of you on here, when I say this, or many of you on here are like, that doesn't exist in my market. I am telling you, in every market, you can find properties that are listed at a price that, at least according to AVMs, are below that number, and therefore an opportunity. Or even if they're not below, if there's a motivated seller, it's been listed for 45 days, 60 days, 90 days, or builders. Builders right now in my market are doing huge price reductions. Huge. It's not that the value's not there. It's that between interest rates and everything else going on, they've got to do something to spark the inventory. And my guess is most builders don't know about this change. Like this very recently happened. So if you're the one bringing those opportunities and explaining that to them, not only can you put some deals together, but that might get your foot in the door with the builder for future other business. Like, hey, this is a smart, plugged in real estate agent who is working hard to creatively and proactively put deals together and make things happen. So
the other thing I want to mention is you can always go back on a contract too if it overappraises and ask for. If you have a conventional contract, I've done that quite a few times where I'll have us as lenders, if we're trying to reduce closing costs for a client, or not necessarily make a fit, but a lot of times it's just a better deal all the way around. They can roll in into their loan. You can always go back. It's just an addendum. It's just like seller concessions, right? You just throw an addendum together if you have a higher price point, in the middle of your process.
Okay. So, Soledad, there isn't a website that you can go to if you want to talk with Jordan about it, or myself. It's very straightforward here. And maybe go ahead, Jordan.
This is a Fannie Mae Freddie Mac rule change, right? We're talking about a change in the handbook, like a handbook, like this thick. So that's where the change is. There's not a website necessarily for it, but it's a change in the handbook, and it's something that was announced. It's a fairly large announcement. Like it's a big deal to me. Like I'm picking up the phone, calling quite a few agents about it, because it is going to help homeownership a lot.
We learned of this change last Tuesday, right?
Yeah.
I don't know that it's to this degree, but for those of you who have been in real estate for a long time, there were grants and programs created 2008, 9, 10 when things were, to help with, moving inventory that are similar to this, to this, not apples to apples, but creating opportunities creatively to make deals work given the current circumstances, interest rates, inventory, things of that nature, right? So, but I want to go back to Jordan, what you were saying. To be clear, you've got a contract, you get an appraisal. The agreed upon contract is for 280, it appraises for 295. Mm-hmm. You absolutely can then go back use it an addendum, increase the purchase price to the appraised value, and then gift equity or or seller help if that wasn't originally in that, or whatever. It's all semantics. Yeah.
But gift equity, yes, you can do that
after the fact.
Correct.
Yeah.
And I do that. We do that often, even with traditionally with seller credits, right? We would do that often, or if we're doing a family loan, like mom to dad, brother to sister, or son to mom, we would do that, and we'd like, all right, let's just see what it appraised for, then we'll adjust our contract. That's where we it's very common to do, and it's not anything that a lender wouldn't be normally see. They would see that normal. That's a pretty normal thing. So.
So someone said, so you offer over list price, then ask for a gift of equity, then what? Well, number one, before that, you want to you want to have research to see, like, is my over list price does it have a chance to appraise, right? Using AVMs. And when I do that, I go to RPR. Okay, that's a resource that we all pay for. I go to RPR. I look at that automated valuation model. I'll go to Remine because they have several, including First American, and depending on the property, Black Knight data is in there. So you just get an idea, right? And you could even look at a Zestimate. We all know that those aren't accurate, but it's at least some idea, right? Is there some way to justify this price? Or you just look at comps, right? Like you go personally look at comps. I wouldn't recommend you spend hours and hours, but very quickly in 5, 10, 15 minutes, you can get an idea of can I justify this over list price offer, right? Because it still needs to appraise. You ask for a gift of equity. Now I'm in PA and this is very new. So I don't know how contractually that there will probably be a change to the Pennsylvania agreement of sale to note that, because right now there's seller help in there, right? There's seller help. But if you're going over, if it's a conventional offer and you're over 3%, it may just be that you have to add a note saying, seller agrees to a quote unquote gift of equity of $10,000 or of 6% total or whatever it is. And you may have to get back with your broker, your real estate broker to determine that. Because again, like literally, Jordan and I learned of this last Tuesday. Like this is not, this is very, very new information. If you are working with us, like, get us, the details, and we can help, collaborate and make sure that it all fits together. Winifred said, I've done gifts of equity in the past. What's different from the past? You've probably done familial gifts of equity, if I'm guessing. Yeah.
That's it. The difference is on conventional loans, the difference is now that they don't have to be related. That's all.
Correct.
On conventional loans. So anybody can offer gifts of equity on a conventional transaction now.
Yes. Yes. So it's a big deal. If you want to explore this in more detail, or you have specific questions, etc., you can get with Jordan or get with myself. We'd be happy to get you more information, details, etc. And I'm going to sometime later this week, we'll dig in and see if we can uncover properties that may be a good fit for this. Why is that relevant? Well, then you can proactively market to your buyer database. Hey, there are several properties that we may be able to creatively get you in the door with zero down payment, right? And that gets you in conversation. And then if the property is of interest, then you can explore how to put that together. But it's all about, using ideas like this to get you into conversation with more prospects, so you can determine how can we help. Are these folks we can help, and when can we best help them? So,
get a free down payment.
Right. Yeah. Get the seller to pay your down payment.
Yeah. However you're going to word it in the best way to market it. It's
yeah. So this is fun and exciting. There'll be more to come on this. If you have thoughts or ideas on it or questions, etc., like I said, you can get back to one of us, or you can call, text, email. Our information is easy to find, or you can even schedule a time to chat with me at josh15.com, josh15.com. Jordan is in Arizona for a conference this week. He's working on sharpening his axe, but we'll be still working and helping. In fact, as we were on here, I got a text from a client that called me late last week that she just completed her application. So we'll have to get on that one. But our team is working. And if you have questions, if you need anything, you can go to wakeup.realestate, use the little chat widget. You can email Mike at growwithjosh.com. Tomorrow is Texting Tuesday. Now, Ryan may be flying solo. He's traveling today, which is why he is not on. I may have to go to an appointment. We'll see, but we'll have some some texting details and information one way or another for Texting Tuesday. And then, normal schedule the rest of the week. I would highly recommend you come or plan to join us on Wednesday for our mastermind workshop, wakeup.realestate/MM. Those are open Zoom meetings. Actually, the last several have been fantastic. And this week, we're going to create seller or homeowner focused Google pay-per-click campaigns and show you how we can build those out and generate some listing opportunities. And then you can use the seller gifts of equity to creatively put transactions together. Okay, Jordan, thanks for hopping on from the hotel there. Have a good day. Thanks for joining in, everybody. Let's make it a great week, and hope to see you all tomorrow.
Thanks. I appreciate it.